Good evening, ladies and gentlemen. Welcome to the IRB Infrastructure Developers Conference Call for discussing the unaudited financial results for the quarter ended December 2021 and recent developments. We have with us on the call today Mr. Virendra Mhaiskar, Mr. Sudhir Hoshing, Mr. Anil Yadav, Mr. Mehul Patel, Ms. Poonam Nishal, and Mr. Tushar Kavedia. As a reminder, all participant lines will be in the listen-only mode, and after the opening remarks by the management, there will be a question and answer session. Please note that the duration of the call would be for 45 minutes. Queries left unanswered after the call can be subsequently mailed to the management for adequate response and resolution. Please note that this conference is being recorded. I now request Mr. Mhaiskar to give an overview of the significant developments during the quarter. Thank you, and over to you, sir.
Very good evening, everyone. I would like to welcome all the investors and analysts on this conference call. Trust you and your families are well and safe. Hope you all have been able to go through our detailed numbers as well as the presentation release. We are pleased to inform you that the company has successfully completed the equity raise of 5,347 crores through preferential allotment of 24.9% shares to Sintra, subsidiary of Ferrovial, and 16.9% shares to Bricklayers Investment from GIC. Out of this proceeds, we have prepaid corporate debt of 3,250 crores. 1,500 crores will be used for growth capital and balance for general corporate purposes after meeting the issue expense. Prepayment of debt, as I just mentioned, was done towards the end of December 21 and early Jan 22. We expect the interest saving from this to get reflected from quarter 4 of FY22. We are also happy to reiterate that the company has won the Group 1 Greenfield BOT project between Meerut and Badau, part of the prestigious Ganga Expressway project with a length of 130 kilometers. And a total project outlay of approximately 6,700 crores. We have signed the concession agreement for the same, and we expect to achieve the financial closure ahead of schedule. The Pathankot Mandi Highway project and the Palsit-Dankuni BOT in Bengal have also achieved the financial closure, which have the total project outlay of 828 crores and 2,314 crores respectively. The appointed date for the VM7 package is also declared, and that happened somewhere in November, as against our expectation a couple months earlier. This has led to some deferral of EPC revenue. Traffic momentum continues unabated. Mumbai-Pune has reported 11% traffic growth in Q3 of FY22 as compared to Q3 of FY21. In terms of the average daily toll collection. We have provided the toll collection for the month of January 22 versus January 21 in our corporate presentation, so as to understand the impact of the third wave, and you can see that it has not been very meaningful. The total order book of the company now stands at 18,500 crores, out of which 12,100 crores pertains to EPC. EPC order book will be executed in next 2 to 3 years, and O&M order book will be executed over a period of 8 to 9 years. The current EPC order book itself will lead to around 15 to 18% CAGR growth in EPC revenues from FY22 to FY24 without factoring any new orders. The Union Cabinet recently cleared the PM Gati Shakti Master Plan. It is a giant stride in India's ambitious goal of achieving the $5 trillion economy mark. There is an allocation of 111 lakh crores of greenfield assets in the core infrastructure sector to be taken out by FY25. Roads with 19% amounting to 20 lakh crores have received the lion's share of allocation among infrastructure sector. This allocation provides very good clear visibility for the order pipeline over the period of next 3 to 5 years. Globally, tempering of liquidity is already started. and slowing it will start in India as well. This will curb excess liquidity and in our case, as we have timely raised resources through the preferential allotment, the same will act as a boon once the liquidity tightening starts in India. The tightening of the liquidity will further help reduce the competition is also what we think. The same will also result in improvement of IRR going forward as the competition gets a bit tame. The availability of equity growth capital that the company now has of almost 1,500 crores will cater to equity requirements for projects worth 20 to 25,000 crores. This is a significant growth capital availability at the end of the company, which will help the company to grow meaningfully and in a very structured manner going forward. I will now request Tushar to give you a financial analysis for the quarter gone by.
Thank you, sir. I will now take you through the financial analysis Q3 FY22 versus Q3 FY21. The total consolidated income for Q3 FY22 has decreased to rupees 1,498 crores from rupees 1.95 crores for Q3 FY21, a decline of 6%. The consolidated construction revenue for Q3 FY22 have decreased to rupees 991 crores from rupees 1100 crores in Q3 FY21, a decline of 10%. The consolidated toll revenues for Q3 FY22 have increased to rupees 507 crores from rupees 495 crores for Q3 FY21, registering a growth of 2%. EBITDA for Q3 FY22 increased to rupees 957 crores from rupees 768 crores in Q3 FY21, registering a growth of 25%. Interest cost has increased to rupees 547 crores in Q3 FY22 from rupees 441 crores in Q3 FY21 by 24%. Interest cost for construction segment is increased by approximately 106 crores in Q3 FY22 as compared to Q3 FY21 due to one-time finance expenses of rupees 66 crores on account of repayment of debt, which also includes the unamortized transaction cost and the redemption premium, and also the interest on the foreign bond of approximately 40 crores on the bond transaction which happened in the Feb 21. We have repaid the loan of 3250 crores towards the end of December 21 and early January 22, which will have an interest saving which will reflect in the Q4 of FY22. Depreciation has increased to rupees 192 crores in Q3 FY22 from rupees 191 crores in Q3 FY21, up by 1%. PBT has increased to rupees 218 crores in Q3 FY22 from rupees 135 crores in Q3 FY21, registering a growth of 1%. PAT after loss of JV has increased to rupees 73 crores in Q3 FY22 from profit of rupees 69 crores in Q3 FY21, registering a growth of 5%. Now I request moderator to open the session for question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Good evening, sir. Thanks for taking my question. And congrats on the great numbers and culmination of the deal. A few questions from my side. On the financials, the other income in this quarter was significantly higher than earlier quarters. So is it the interest that we accrued on the equity infusion by GIC, etc., that is responsible for it, or was there some other exceptional item as well?
Vibhor, in this quarter, we had a roughly fair valuation of gain on account of receivable from the private trust of roughly 170 odd crores. And this was part of other income. and same is also accounted as expense in the private InvIT. And out of that, 51% share of loss is accruing to IRB. And net impact in books of IRB for other income is 86 crores. And further, as Tushar explained, that during the quarter we have incurred one-time finance expenses of 66 crore rupees. That is because of the unamortized transaction cost and redemption premium due to prepayment of the debt of the company. The net impact is approximately 20 crores pre-tax. So if I will share the calculation, 176 crores is the other income, and out of that 51% belongs to IRB. So then if we reduce the 90% loss from the private InvIT, that is a 90 crore rupees, and 66 crores one-time expense, then the net impact is 20 crores in the PBT. So on the PAT side, the net impact would have been on account of this one-time income and expense netted out would have been in the range of 15 crores.
Okay, so just to get the thanks for the detailed explanation, but just to get it right, the total other income that we reported in this quarter is around 207 crores. Out of that, how much was exceptional? 170 crores.
176 crores.
Right. And the 96 crores loss that we reported from the share of profit, out of that, how much was exceptional? 90 crores.
Yes, 90 crores. Because this out of the 176 multiplied by 51%, that is 91 crore rupees. And this quarter loss in the private InvIT from the previous quarter would have been significantly improved because of the toll collection. But because of the loss from fair valuation loss, the loss has in fact increased if you compare with the corresponding quarter of the last year.
Got it, sir. But again, if I look at the other income, it's around 207 crores. If I remove 91 crores, even then we are looking at around 110 crores of other income as compared to 35 to 45 crores that we generally report for a quarter.
So, Vibhor, 175 crores is reflecting in the other income, and 90 crores is reflecting in the share of the loss from the private InvIT.
Got it. So sir, then my question is that if I look at the overall numbers, and if I, let's say, remove the 170 crores, and if I remove the 90 crores and the 65 crores exceptional items also, the other line items of the overall interest expense and our depreciation and all, those will continue to be similar range going forward. Interest, of course, will come down as we pay back the debt of 3,200 crores, as we mentioned, by the end of the quarter. But other than that, I think most of the other line items probably would remain the same.
Yes, but as we have also discussed that the VM7 project has already started.
Right.
We feel that going forward the construction revenue will improve, and there should be almost delta of 140 to 150 crores in the interest expense itself. So there will be almost 140 to 150 crores of interest saving. Out of that, roughly 75 crores, that is, we have paid roughly 3,250 crores. So roughly 320 crores is interest for entire per annum, and roughly 20 odd crores is the interest for the per quarter basis. And around 66 crores was the interest for one-time expense. Both put together translate to 146 crores. So that itself will, basically interest will decrease and profit before tax will improve.
Got it. So at the end of the quarter, what was the standalone, the holding company, what was the holding company debt level?
By month of January, the holding company debt has come down to 3,000 crores, and that includes 2,200 crores of bond debt and roughly NCD of 350 plus 200 and plus 200, around 750 crores of NCD. So that translates roughly 3,000 crores of debt at holdco.
And that is probably will remain going forward.
That will remain going forward.
Got it, sir. Sure. So also, my next question was basically on the other projects which are basically your Padhankot Mandi and the Palsit Dankuni project. So we received the financial closure. When would we be likely to receive the appointed date for the same? Is it that we might get them in Q4 itself, or will the start of execution spill over to next financial year?
We expect the appointed date to come this month itself, maybe towards the end of the month.
Right. Got it, sir. Sir, just wanted to basically pick your brain a bit on the overall opportunity. I think this Ganga Expressway project, I think, is a big opportunity for us that has in fact given us a huge boost to the order book. Going forward, sir, apart from the recurring HAM projects that we keep on bidding, any other large ticket size opportunity that we are bidding at? I know the current order book is still a good visibility of 15% top line CAGR for the next 2 to 3 years. But any other big opportunity that we are looking at or eyeing or is in the pipeline from the government side that you can talk about?
The order pipeline is quite strong. As you know, a couple of BOT projects, couple of TOT projects have already gone down the hammer. We don't know the result of those. And in terms of HAM order pipeline also, the same looks very robust. So I don't see any dearth of projects. But as I said in my earlier commentary, we are very well solved for the order book part for next 3 years, even if I assume no order improvement from here on. Still 16 to 18% of CAGR growth looks comfortably doable. So certainly we will be very choosy in adding anything to the order book now that we have significant visibility of the same.
Got it. Great, sir. Thank you so much for taking my questions and wish you all the best.
Thank you.
Thank you. Reminder to all the participants, to ask a question, you may please press star and 1 on your touchtone telephone. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, thank you for taking my question, sir, and congratulations on a good set of numbers. Sir, my question was again with respect to Ganga Expressway only. I think when we spoke last time, I remember made to believe that you're looking at debt equity mix of around 50 to 50, I think, which is where it seemed that when you would look for a partner. So any progress on I'm kind of trying to kind of rope in a partner for this project so that the capital intensity comes.
Hello.
Hello.
We are not able to hear you.
Am I audible now? Is it better?
Little better.
So I was asking, for Ganga Expressway, are we planning to rope in a partner or are we planning to kind of have it as a part of our private invest? Because I think the idea would be to kind of try and reduce capital intensity, and with this project, I think initially we were made to believe that the debt equity mix would be 50-50. So which
I got your question. Yes, the answer is yes. The project we are contemplating to execute under the same private equity construct.
Okay. So which is where you would be required to put in 51% of the total equity requirement, and the balance would come from the other partner. And how about the original deal? How much of that money is yet to be infused? We were supposed to put in 4,600 crores, and the partner was supposed to put in 4,400. How much of that is yet to go?
That money has already come in.
The entire 9,000, between two of us, is already come in.
Yes. All the money has now come in.
Sure.
The project execution again now for the 2 projects which continue to be under construction.
Sure, sir. And Anil sir, on your the losses that we booked from associates, so if I were to adjust for this 170 odd crore rupees of number, what could be the quarterly run rate going forward? I think till last quarter we used to do almost around 40 odd crore rupees kind of number. So, if I were to adjust for the entire, assuming that entire 90 crore is because of this one-time gain entry that you've done in your books, and obviously, the contra entry would be there in the private invest as well. Does it mean, the losses have come down to zero?
Yes, I think losses should be in range of around 10 to 12 crores per quarter.
Okay, and whenever Hapo Moradabad kind of comes into operation, would we get to see some change in the number? Because initially there will be depreciation or interest because of till the time the toll collection stabilizes. So could there be a short-term rise in the losses and then again it will go down? Or you believe the number would go down from 10, 12 crores further down to, let's say, zero, or I mean, you turn profitable in all these projects on aggregate basis?
Same, with regard to Hapur Moradabad, it's a 4 to 6 laning project, and interest is charged to the PNL. So today we are charging the interest to the PNL account. So there will not be any additional charge on account of the Hapur Moradabad.
No, I was talking about the amortization part.
So I think amortization initial year, because the long concession, the amortization amount will not be significant. And further, on completion, the project will also go for the tariff revision. And recently completed project, we have seen between 56 to 67% increase in the tariff.
Okay.
So it will have a significant tariff bump up once the project is fully operational.
Sure, sir. Sure. Thank you. And that's it from my end. And all the very best for future, sir.
Thank you, Fred.
Thank you. The next question is from the line of Mohit from DAM Capital. Please go ahead.
Hello. So congratulations on closing the deal with the Ferrovial and GIC. Sir, my two questions, sir. For what is the status of land acquisition for both the HAM and Ganga Expressway, and when are you likely to subcontract, and when do you expect the work to start on all three?
I think the 94% land for Ganga Expressway is already in possession of UPIDA. So in terms of starting the construction for us, I think it's only the financial closure which is the prime requirement. Rest, I think we will be able to start the construction pretty soon upon achieving the closure. On the HAM project, also Chittoor Thachur, we are in the advanced stage of achieving FC. There also the entire land is in place, and we will in fact be starting to move in and get ready to start execution therein as well. Same is the story. We have already partially mobilized for the Pathankot Mandi project, and even that we expect to start construction by end of this month once we have the appointed date.
So can you please give us the breakup of funding of Ganga Expressway?
Ganga Expressway, as you know, has a grant component of 1,750 crores. And post that, we are right now in discussion with the banks on finalizing the debt equity mix. And once we have more color on this, we will share that with you.
And as far as bidding is concerned, as we have discussed about, we can go between 70-30 to 50-50 debt equity.
I think this being a greenfield project, the way we have put in our bid, we have assumed around 2,000 crores of equity for this project. So that's the kind of equity we envisage to be put in for the project. That is together, the entire equity. I mean, the split for IRB can get restricted to 51% of that.
And how much is how is the ordering pipeline looking for us at this point of time, especially on the TOT, BOT, and HAM? Can you just quantify, what the kind of things you are looking to put the bid for in Q4 especially?
As I said, 2 BOT and 2 TOT projects, the bidding has just closed. We are yet to know the outcome of the same. And for the next few months, I think on the HAM side, there is a good amount of visibility. So, but as I said, now that the order book has improved to almost 19,000 crores on a consolidated basis, we will be very selective on adding any new orders unless the same is able to give us a good amount of margin visibility. So we will be choosy in adding to order book given the fact that we have very good visibility now for the next 3 years.
And have you heard something from the ministry on the BOT opportunity, sir? Do you think the BOT there will be more BOT tenders in FY23?
Yes, we do expect at least 4 to 5 more projects to get bid out on BOT.
Lastly, sir, is there any update on Ahmedabad Vadodara arbitration? Can you please share that?
Ahmedabad Vadodara arbitration, I think we had explained you about the interim award that has come through, and that has settled two of the key aspects of the arbitration, and the further arbitration proceedings are going on. So I think in next 6 to 8 months we can expect the final award to be in place.
Understood, sir. Thank you and all best of luck, sir. Thank you.
Thank you.
Fine. Thank you. The next question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hello. Hi, sir. Congratulations on a good set of numbers. My first question is on the board. Now you have 2 board members from Sintra. So do you also have someone who represent a board seat from GIC?
We don't have a board seat representing GIC, but they have a right to appoint an observer to the board meeting, and they do exercise that.
They have already appointed someone, or they are in the process of appointing someone?
It's an observer position, so anyone available from their team can always come on board depending on the availability.
Okay, sure. My second question is, once the private InvIT projects or projects become operational, so and revenue, do you envisage any loss funding or shortfall and debt and interest servicing? If you can, if that's the case, then what could be the quantum? If you can just give some insights there.
Sorry, I am not able to get you. Can you be a little more clear? Your voice is not clear.
In the private InvIT, can you hear me now? Is it better?
Yes, better, sir.
Yeah. So I was asking, sir, in the private InvIT, once all these projects become operational, do you envisage that there could be some loss funding in initial years for servicing the debt and interest? If that be the case, then if you can quantify that number.
Yeah. So private InvIT, once fully operational, on a consolidated basis, we don't see any negative cash flows. And it would be a self-sufficient portfolio.
Okay, so we will not be required to give any support from the parent company for the equity injection in terms of shortfall funding for these projects.
No, we don't envisage it.
Okay. Another question is on inflation, sir. So globally inflation has been rising, and even I think in our private public InvIT we have taken decent price hikes linked to WPI. So if you can quantify any price hikes taken in the projects in the IRB portfolio, and do you think this may be positive for the portfolio because the 8-9% price hike in private InvIT was like quite big. So if you can just give some sense there.
Yeah. So Parikshit, as you rightly mentioned that the rising WPI has been observed in the month of December, which is the basis for deriving the tariff hike for the projects starting from 1st April 22. So the tariff hike for the projects which we have in the IRB is AV, which will have that tariff revision to the extent of 7 to 8% on account of WPI rise, and all other projects in private InvIT will also have the similar kind of rise. So therefore, the WPI benefit will come from the FY23 onwards.
So have you factored in your valuation of the private InvIT? Are these numbers like much ahead of your estimate?
So Parikshit, what we factor as an inflation hike is around 4 to 4.5%, but this is a significant gap of around 8% for what we are assuming as a tariff hike. So this is not
yet factored in the
this we have not
InvIT valuation.
Yes.
Okay, sure, sir. Because this can give quite a lot of upside on the remaining tail of the project. So because this will stay there, I mean, irrespective, I mean, this cannot get reversed. Okay. So, but what kind of volume growth you have been seeing on the project? If you can give some sense on the volume growth, given there has been a pickup in GDP. So how are you seeing the traffic growing across projects?
I think the volume growth has been very good. The key asset in IRB, as you know, is Mumbai-Pune. And we have witnessed almost 11% volume growth because in this asset there is no tariff revision this financial year. So whatever is the revenue growth is only because of volume growth, and that is almost 11%. So I think it's going to be a very interesting year going forward, where you will have a very peculiar scenario of high volume growth because of the catch-up effect and endemic playing out, and also a high inflation number resulting into a higher tariff realization. So it will be a very, very strong revenue growth that one can pencil in as a result of this combination.
But sir, I mean, the volume growth because of pent-up may be already factored in, right? I mean, because it's coming off on a low base, plus there could be some pent-up. So, but on a like-to-like basis, if I have to say, if you compare it maybe pre-COVID levels, so you can give some sense on the volume growth if you have it available right now.
So I think the overall economy has been doing well. So I'm not betting anything on the pent-up demand, but I'm saying because of the economy doing well, we expect the volume growth to remain strong and will be able to be supported by inflation-led higher tariff.
I'm saying because the product of the two can lead to a very large reset on maybe next year numbers, and which on a maybe even a lower growth of 7 to 8% put together on growth and inflation can be a big driver for value. So do you think that that kind of reset happening at least maybe next year, where the product of the two can be really 14-15%?
Yes, it's a very, very good possibility.
Okay, sure, sir. And just last question, sir, if you can just give a breakup of further both at the parent level and the private InvIT level. So what will be our contribution to the equity over the next for the remaining duration of the projects which are under construction to be completed? So cost to completion equity requirement for both parent and the private InvIT contribution for IRB.
Private InvIT, I don't think there is any much equity left to be put in. For IRB, I think, as you said, around 500 odd crores will be Bengal, around 6,000 crores.
Sorry. Can you please repeat, sir? I just missed it. Sorry. Can you please repeat?
51. With respect to IRB, per se, including the investment in private InvIT for Bengal and Ganga, this year's equity requirement will be roughly 2 billion, that is 200 crores. Next year, around 600 to 700 crores, and similar in FY24 as well.
And year after that, sir, is it like 1,600 is the total requirement, or after that also is it something in FY24?
There will be a very minuscule amount of around 100 crores or will be left out in FY25 for Ganga.
And this Ganga Expressway is done through private InvIT, or you will have a different partner here? So sorry, I missed. I think that question was asked earlier. So you said you'll be having about 51% stake. The balance will be from GIC?
Yes, we will be contemplating to execute this project on a similar platform of 5149.
Okay, through the private InvIT route only, right?
Yes.
Okay. So these numbers which I think Anil sir said right now is just the contribution about 1,600-1,700 crores of residual equity requirement.
Yeah. This is the equity requirement assuming a 5149
in the next.
And IRB will have to put in across its project
over the period of next 3.5 years.
But HAM will be done by us entirely, right? So it won't go through the private InvIT, right?
Yes. So this equity requirement is including HAM also.
Okay, so HAM, but the only part is it assumes 51% in Ganga Expressway. So about 1,000 crores will be put in by a partner over and above this.
So just let me re-explain that. So Ganga 5149 around 1,000 crores. Bengal total equity 500 odd crores, so around 250 crores.
Okay.
And the balance equity on the Pathankot, Mandi and Chittoor Thakkur together will be around couple of 100 crores. So that is the 1,600-1,700 crores of equity over the next 3.5 years.
Got it. Thank you so much.
Thank you. The next question is from the line of Mehul from Quant Mutual. Please go ahead.
Hi, sir. Am I audible?
So there's a lot of disturbance from your line, Mehul. Can you please check?
Is it okay now?
Yes, this is better. Please go ahead.
Yeah. Hi. So, since we are targeting very niche kind of orders right now, very choosy in what orders that we'll be going forward for. So, can you tell me what is the kind of ROC that we are targeting right now for new orders that we might bid for?
See, I think it will be interesting to study our model. And you would have seen that we usually undertake BOT projects, and if I have to look at the BOT project that we are going to execute going forward, then with a 51-49 kind of split, we would have around 10% PAT coming from the construction profit. And if you look at the realistic equity that would go into the project, I think the return on capital that the project will be able to generate, assuming we sell the project in say period of 5 years, will be almost 55%. And I can explain this number to you. If you assume a 1,000 crore project with say EPC cost of say 920 crores, assuming the balance to be interest during construction, and you assume a 70-30 debt equity mix, with the EBITDA will be around 230 crores, and at the 10% PAT, the PAT will be around 101 crores. So the net equity that will get invested, assuming we are investing 51%, would be around $52 or 52 crores in a 1,000 crore project. And if I have to assume that in 5 years' time, assuming around 2.5 years of construction period, 6 months of financial closure, and then 2 years for stabilization. So if I take a tenure of 5 years, roughly average investment period will be somewhere around 3.5 years. And even if we sell the project at say one-time book, the value realized would be almost 153 crores against the 100 that we put into it. So the return on investment on a totality basis will be almost 195%, and if you annualize it, assuming it's a 5 years profit, it will still be almost 55%. That's the kind of return of capital that this project will generate as a construct. So if one has to look at ability of IRB to generate return on capital, one should look at two aspects. A, are we generating 10-11% PAT margin on our construction business? And B, are we able to sell our project at a minimum one-time book? If both these parameters are being met, then the significant return that the business generates is clearly a done thing. And I think that is how I will conceptualize how the business is conducted and what is the value creation potential or capability that the business, the way it is structured, has.
Okay, all right, sir. Okay, so we'll be targeting the projects which meet these criteria most probably, right?
Yes. That's what we usually do. That when we bid for a project, we certainly try to ensure that we have decent margins on the project and comfortable IRR, and only then go for it.
So would you be able to give me a ballpark number of margins that we might be targeting going forward next 3 to 4 years from now?
I think we have steadfastly stuck to the margins on construction, and we have been very, very careful on ensuring that we don't bid aggressively. And if you see, we have been able to report 10 to 11% PAT margin on our construction vertical.
Right. So would there be any increase in that, or would we be targeting the same thing going forward?
If we look at the existing order book, we should certainly be able to retain that kind of margin.
All right. Okay. Thank you so much, sir. Just final one question. So how has been the toll collections for this quarter?
With respect to December, we have talked about that key asset Mumbai-Pune has witnessed 11% growth. And on slide 20, we have provided a toll revenue comparison for the Jan compared with the Jan 22 compared with the Jan 21. There also, because of the Omicron, some of the toll road which has larger passenger traffic, there we have seen some reduction, but reduction is not significant. It's minuscule 2 to 3% lower toll revenue in the month of January. But as we are talking about, already most of the project already picked up as the government has already eased out the restrictions which was imposed early January.
And in fact, very recently, government has also announced, some of the state governments have announced that the restrictions will be completely removed from the coming week onwards.
From 14.
So this will also support the improvement in the overall traffic for the projects.
Okay, understood. Thank you so much, sir.
Thank you. Reminder to all the participants to ask a question. You may please press star and 1. The next question is from the line of Mohit from DAM Capital. Please go ahead.
Hi. Sir, thanks for the opportunity once again. So my question is, sir, is there any plan to offload one of the asset of the HAM or BOT to public InvIT over the next 12 months?
I would say that, look, if I have to analyze the business setup, I would say that IRB is the bidding and execution vehicle, and the private InvIT certainly becomes the development vehicle. And public InvIT can certainly be the ultimate place for the project once it is completely de-risked, where it can be for the rest of its concession life. So if this philosophy of churning capital is to be believed, then most certainly, as you rightly said, with all the 9 projects becoming operational and construction getting completed, and few of the earlier projects now having been fully stabilized, it will certainly be the right time to and get into the process of churning capital at the private InvIT level as well, whereby assets can be offered to the public InvIT. And once we reach a right decision on that, we certainly will come back and give you more clarity on the plan of how, what and how much unlocking can be done for private InvIT and what kind of opportunity that will make available for the public InvIT, because we are also mindful, being the sponsors for the public InvIT, that 2 of its large assets will go out in this coming financial year. So we would be mindful of ensuring that we are able to offer them enough fodder for them to grow as well. So I think it's a perfect fit that IRB is today, where the private InvIT will have the opportunity to consider and offer assets to the public InvIT and use the capital that it will get to deploy that into the newer assets that will come its way as a result of the recent wins made, the Ganga or the Bengal BOT project. And I think it then creates a perfect churn of capital. And if this churn of capital retrofits the way I am suggesting, then the entire construction profit at IRB end, which we have been redeploying for equity in the project, will stay completely free and available for the IRB shareholders to use it for deleveraging its balance sheet further or for distribution.
Yes, secondly, on the private InvIT, how many assets which are still awaiting, full toll collection, in the sense the maximum possible potential?
7 assets of the 9 are fully operational, where toll is being collected, and 2 of them are likely to be completed in the next couple of months.
Which one are those, sir? Can you just please name them?
Hapur and Kishangarh Gulapura are at the fag end of completion.
Understood.
And they will also undergo completion in the next 2-3 months.
Understood, sir. Thank you, and best of luck, sir. Thank you.
Okay.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yes. Thank you for taking my questions again, sir. Just want to understand on this 176 crore rupees of fair value gain that you've booked in this quarter a little better. So what would have led to this fair value gain? I mean, is it that we were much more confident of traffic numbers, which is what would have led this, or we've received extension in concession, which is what would have led the fair value gain that you booked during the quarter?
Prem, with respect to the receivable based on Ind AS principles are accounted at fair value, and depending upon their clarity with regard to the receipt of the amount, those are discounted with a discounting rate. And if there is any change of the interest rate, or in any particular project we have filed a claim, and if that particular claim is little bit on a higher side, then the fair valuation is subject to every quarter it will get revised. So during that quarter, because of in some of the projects we have filed a claim, and discounting rate was also adjusted, and that has led a gain of 176 crores.
Sure. So this essentially would pertain to that 3,600 odd crore rupees of deferred payment that are reflecting in our books of accounts, right?
Yes.
Okay. And we would evaluate, I mean, we would do this kind of similar kind of exercise on a yearly basis, wherein we would review whether there is more fair value gain possible, I mean, depending on the way the rates move. Am I right in my thought process?
Prem, typically this happens once you file a claim for a particular project. If claim amount is much higher, then typically you will have a fair valuation gain. And because of the change of the interest, the number does not change very materially. And we don't expect that number to have a very significant in coming quarters.
Sure. And just one last from my side, I mean, the bookkeeping sort of. The EBITDA margin for our construction vertical seems to be on a higher side than our the usually what we get to have from our organization. So any one-off in EBITDA margin this quarter, and what should be the number for the, let's say, FY20 and 23 and 24? I mean, depending on the mix that you have in terms of hybrids and BOT toll.
Prem, with regard to EBITDA, if we compare corresponding quarter of the last year with adjusting 175 crores of this one-time income, the EBITDA margin is 29% as against close to 30% in the corresponding quarter of the last year. If I will adjust the entire other income, if I will talk about the operating EBITDA.
Yeah.
In fact, it has reduced by 100 basis points. And going forward, as we have talked about earlier also, because of the HAM project will start execution, our EBITDA margin will remain in range of 25 to 27%.
Sure. I have some different number on EBITDA, so I'll get in touch with you offline and I'll take the discuss it working with you. Thank you. That's it from my end.
Thank you. Ladies and gentlemen, we take the last question for today. That's from the line of Alok Deora from Motilal Oswal. Please go ahead.
Good evening, sir, and congratulations on good numbers. Sir, just a couple of questions. Sir, one I wanted to know about, since we already have a very decent order book now, so going forward, we focus on the toll projects again, or we are open to take the HAM projects also? Because earlier we were, I mean, when the HAM projects were launched, we were not too comfortable taking that, but because of the slow BOT awarding, we took some HAM projects. So what's the strategy going forward?
Good question. The strategy is very clear that our preference remains BOT over HAM. And as you very correctly said, we did fill up the execution side by having 4 HAM projects now. What we observe right now is there is intense competition and a big cost cutting that people are venturing into while bidding on these projects, which to my mind is a great value destructor. And we would like to stay away from such kind of a scenario where we are not sure of making any money. So we will continue to evaluate and participate in HAM selectively where we think that the size and the fit and the margins are realizable. We wouldn't say that we will not bid for HAM. We will bid for HAM selectively where we think it will be value accretive. But otherwise, the focus certainly will remain BOT. And that's the way forward now that we have a good visibility on the order book.
Sure. And sir, one question related to a question which was asked earlier about the asset addition in the public InvIT. So the InvIT launch has been done like 2 years back, and we have not really added any other. And so how are we looking at this public InvIT now? Because earlier there was some plan of adding some HAM assets, but now we are looking to add assets once it goes to the private InvIT. So when do we look to really add any asset here? Because once the couple of the big assets go out of that portfolio, the public InvIT will be kind of left with little cash flow.
Okay, without being in a position to divulge much at this stage, I can certainly say one thing, that we are absolutely aware of these facts and are very much what we can say aligned to the process. And as a result, while the HAM project once completed post 6 months can certainly be made available for the public InvIT, even the ROFO arrangement gives us the opportunity to offer assets from the private InvIT as they stabilize. And there will be every endeavor to ensure that this capital churn links to the reduction of risk from IRB to private InvIT to public InvIT, and the unlocking that it will unleash will be kept in mind, and appropriate decisions will be taken and projects will be offered going forward to the public InvIT from these platforms. And that will create an extraordinary unlocking of capital, and will be a win-win for IRB, private InvIT and public InvIT, all the three.
Sure. So anything we can look forward to in the maybe say next 6 to 8 months of that happening? Any project getting transferred to the public InvIT?
As I said, I can't divulge the details right now, but certainly there is work in progress.
Sure. Thank you so much, sir, and all the best.
Thank you.
Thank you, ladies and gentlemen. With this, I hand the conference over to the management for closing comments. Over to you, sir.
So I would like to thank all of you for being here on this call, and we'll look forward to host all of you for the next call as well, next quarter. We wish you a good, happy weekend, and look forward that we all stay safe and no more waves are experienced and things normalize sooner than later. So with that note, I would like to end this call. Thank you.
Thank you. Thank you very much, sir. Ladies and gentlemen, this concludes your conference for today. We thank you for your participation and for using Research by Conferencing Services. You may please disconnect your lines now. Thank you and have a great day.